So, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending? How do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. I'm Merrill Chandler, and welcome to the Are You Effable podcast. Welcome back, everybody. Merrill Chandler here, your host of Are You Effable? And if you haven't become effable until now, we're going to keep going because just as I promised in the last episode, this episode's about the quintessential, the greatest, quote, business credit scam that has been perpetrated on borrowers yet. So stay with me because we're going to go all out when we get back. Okay, so today we're talking about how literally business credit and the perpetrators of these fake notions of what business credit is, they literally try and make us climb the wrong tree, right? So that's what we're calling this episode, the climbing the wrong tree, building business credit that is actually meaningless to lenders, right? So let's get to the bottom of what we're actually talking about. Now, business credit building scams, it has one principle to it that covers everything and all the business credit builders out there. If you have to give them information to report, it is not true business credit. Guys, if you have to give them information, meaning you give it to them and then they report it, it's not business credit because it is your information and you're curating it, you're choosing it. You don't give your credit to Experian, TransUnion, and Equifax. They are collecting it from the third-party reporters, right? The creditors, the lenders, the cell phone bills, the collection agencies. They're collecting it, and then they make a credit report and build a profile based on that information. You're not giving it to them. So that's our first hint that this is just the scam of scams. If you have to give them the information to report, then it is not business credit. I use an example here of the Dun Bradstreet CreditBuilder Plus. So let's take a kind of a deeper dive on that business credit builder plus. First of all, they want to charge you $149. And remember, I said this once before, I'm going to say it again over and over and over, that business credit reporting does not follow the same rules that personal credit reporting does. They don't have to. There is no Fair Credit Reporting Act for business credit reporting. And if you look at the business credit reporting environment, you're going to see the people who score the data, FICO, and even the subsidiaries of the credit credit bureaus and Vantage Score. They're all different companies. You cannot report the data and score your own data. A third party has to do it, right? So that's one of the things that we want to look here is that Dun Bradstreet is literally telling us we will build your credit for you. So let's look at one of the features that they offer here. That feature for $149 a month, they will add 12 positive payment experiences to your business credit file. Now remember, we've gone through these deep dives numerous times. You know, examining credit reporting, unweighted scores versus weighted scores, FICO versus FACO scores. They allow you you pay them $149, and then you go collect 12 vendors, and you give that payment information to Dun & Bradstreet, and then Dun & Bradstreet will call those individuals and verify that those payments are on time. You with me? So you're ratting yourself out. You're providing the data. And so for $149 a month, you get to build this credit profile with Dun & Bradstreet. The thing is, as I'm going to show you in every one of these, the lenders, the business credit line lenders, the business loan lenders, even the business credit cards do not look up your Dun Bradstreet, your DNB rating. They don't look up your Experian business. They rarely look up the Equifax business credit reports, because those credit reports have information. Remember a few episodes ago where we said that they hold the information, but they don't hold the they hold the information. They report the information, but they're not being accountable with how they're using that information. So let me give you another example. eCredible has come online recently saying, "Oh, Dun Bradstreet has the a corner on this market. So we want to get in the business building, the business credit building scam like everybody else." So what do? They make an offering. They say eCredible makes building business credit as easy as paying your bills. Why? Because when you do the exact same thing that you do with Dun & Bradstreet, you provide your power, your water, your gas, your mobile phone, cable, satellite TV, internet, and landline. You give them the information, and eCredible will create a business profile that is eCredible profile, right? If they add it to Dun & Bradstreet, or if they added Experian or business, do you think for a second that Chase, Wells Fargo, Citi, BB&T, any tier 1 or tier 2 bank who offer the very best business loans and business credit lines at the very lowest rates, the very things, those trophy lines that we're looking for, do you think they're going to give you a $50,000 business line of credit on your water bill reputation, on your cable TV reputation? It's not going to happen. Never has, never will. So the reason why I call them scams is because since you don't know the difference, you're thinking, yeah, I want my credit reputation. I want a business credit report. I want business credit because I'm looking to get credit lines and loans for my business. But there's a vast chasm, guys. There is a huge gap, at wide as the Grand Canyon in financial terms, between these types of business credit building scams and business lending metrics that are being used by the big lenders. Now, another one of the biggest ones out there is Credit Suite. And so their advertisement is how to build credit for your EIN that's not linked to your SSN. And so that's an employee identification number. So link it to your business and not to your personal. And that sounds great, right? They're like, yes, let's do that. Here's what's fascinating. Here are the 5 steps straight from their website, where get business credit reports. So whatever name you have, whatever business you're operating under, they say get the business credit report. So that's Dun & Bradstreet, Experian Business, and Equifax Business. So no harm, no foul. I tell you to do the same thing. Next thing they do is they say, let's apply for vendor credit. Now, vendor credit is a broad based. It could be, let's get some for fix and flippers out there, or for you retailers. That could be vendor credit. Could be a paper supplier. It could be a carpet supplier, or your cabinetry people, right? Vendor is it could be a Uline, right? These guys push, Credit Suite pushes Uline. Now remember, traffic is still a thing. For anything to matter, you can't just own an account, you got to put traffic on it. So they tell you, and by the way, these 5 steps take 18 months to accomplish. But when you get to the 18 months, I'm going to tell you exactly where you end up. So apply for vendor credit. So that means get those trade lines or that where there's where somebody's supplying something to you, right? Then there's retail credit. That's your Home Depot for the business. And it's true. If you know what you're doing, you put it on your EIN, right? You don't put it on your business, your personal profile. You put it on your business profile. And retail credit is is oh, you could do Federal Express, right? Great retail credit. Sometimes that can be under vendor credit because they're kind of hybrid between the two. But retail credit is Staples or Home Depot, Lowe's, any retail credit that services the business community. All right. So that's step number 3, apply for retail credit. And then you pay that for a few months and you're running traffic on, these are 3 to 5 credit cards, or they're not credit cards, 3 to 5 what they call trade lines. And then step 4, the next one is to apply for fleet credit. That means get a gas card, but get 2 to 3 of them minimum, 2 to 3 of them. So now we're sitting here with gas cards, and it's still all merchandise. Up to here, steps 2, 3, and 4, vendor credit, retail credit, fleet credit, it's all 100% merchandise, right? Even the gas is you're buying a commodity. You're not getting cash credit. They wait to step 5 to go to cash credit. Now, cash credit means you're getting a cash credit card. But here's what's interesting. These cash credit cards are few and far between, and they're low. They're what we have called in the past, they're tester limits. They want you to prove up. So after 18 months, you're applying for cash credit, and that could be but many of these cash credit cards report to your personal. It could be the Spark, because they're saying you're applying under your EIN, but they do not take into account truly the personal credit reporting versus the business credit reporting. And these guys are the cash credit are low limits. Nowhere in here, guys, is there a consideration for getting a business loan or using these credit markers, these credit accounts, this reputation to build so that you can acquire the trophy credit lines that we've talked about all in this entire podcast. Now, so let me tell you about Brad. Brad, yeah, many of you you've seen him. If you've been binging these, you've seen him. My partner in the business, Brad, actually has a meeting with one of these guys because we're trying to suss out. Back in the day, a few years ago, we were looking, what is business credit? How does it work, et cetera, right? And so he has a conversation with one of the VPs at Credit Suite, and he literally asked the question, so if I go through your entire 18-month program, can I get a bona fide business line of credit for $20,000, $30,000, $50,000? And without a hesitation, the VP answered, no, that isn't what this is for. Guys, the intelligence of the question begets the intelligence of the answer, right? But because until now, we haven't known what business credit really is. So we pay these guys money, gobs and gobs and gobs of money to build our credit with Dun Bradstreet, to build our credit with eCredible, to build our credit with Credit Suite. This is not okay. All right. Now, the other thing what credit reporting, legitimate business credit reporting are, Dun Bradstreet does collect data. The data is very sparse. I'm going to show you here in a second. The data is very sparse, and it's very elemental, right? It's very basic. Equifax has a business credit reporting process, and so does Experian. The thing is, each one of these collect data, but it is substandard. It is not even 10% of the accuracy and thoroughness that personal credit reporting is. Remember, I told you that Dave Smith, the SBA, Small Business Association liaison between FICO and the government, told me straight up that business credit reporting today is what personal credit reporting was literally in the mid 1980s. That's 40 years ago, guys. So 35 years ago, excuse me. So what are we going to do? We have to know the rules of this game so that we can create it. And I have clients, guys. So let me bring up one of my clients' credit profiles. Right, I took out the name of everything, but I want to show you what this actually means. And if you're not watching the video version of this, then be sure to go to getfundable.com. And for those of you, the Funding Hackers is being forwarded to getfundable.com. Go to getfundable.com and click on the podcast. And when you click on the podcast, you're going to see everything that you need to see from the slides and the graphics from this episode, right? If you want to see it live, then guys, watch it while you're watch it. I was going to say watch it while you're running. No, don't watch it while you're running. Don't watch it while you're driving. But if you're at the gym or something, you can watch it on your phone or at home on your desktop. Make sure you see these graphics, because I'm showing you a lot of crazy important information. Now, business credit reporting this data is used by FICO, who, as we said, is entering the business credit reporting space and is going to take over the business credit reporting space. And it's going to be amazing, because I trust FICO, lenders trust FICO, and as soon as FICO starts gathering all this data, it's going to be so much easier to move and even get approved and use automatic underwriting in the business credit space. Right now, it's kind of the wild, wild west, and so we have amazing workarounds to navigate these waters. Right? There are credit lines for the taking if we meet the underwriting guidelines. So let me show you a couple of things that are huge landmines that we need to watch out for on these business credit reports. I'm just using Experian as an example. All three business credit reports have some of the same problems. So notice it's that the name of this company was Real Estate Something LLC. I blocked it all out, but Real Estate LLC. Red flag word if that's because that's one of the things that are not fundable when it comes to SIC codes. But look over here. The SIC code and the NAICS code is real estate agents and managers, offices of real estate agents and brokers. The two designations are red flags. This is going to create a denial. So when I showed you the approval process where FICO takes the personal profile and then goes and checks the legitimacy of the funding entity, the QFE, the qualified funding entity. When it checks that entity, it's going to get a big fat no here, because real estate is one of those, is not a fundable and is what they call a high risk. But in our world, it's an unfundable SIC code. So you're going to get thrown out with the bathwater. Now, look over here, it says payment trade lines. See details, right? I'm going to show you the details. See payment trade lines. There's one. So the details are down here. But notice it says, when you're looking at the graphic, all you have to do is imagine, if you're listening to the audio, just imagine under trade lines, it says supplier category. It's a credit card. All right. It doesn't say what lender. It doesn't say the limit, or it says that the date reported was 12/11. The activity date was 12/8 of 2017. Payment terms was revolving. Fine. Recent high credit was 29. That means kind of the high water mark that we've talked about in previous episodes on balances and utilization. But over here, it just says the balance, 24. There is zero. There is no reporting of the utilization, the due date. There's no 24-month look back period here. There is nothing that gives us any data about the type of account. And so these, so business inquiries, 5 business inquiries, UCC filings, 0, business scoring. They said, yep, there's no collections, judgments, liens, bankruptcies. But notice even that's looking at your personal profile. So the trade line information says credit card with no real and a recent balance. None of that is actionable intel, guys, and we got to understand this. So next thing is the business credit score is 34 out of 100. 1 to 100 is the range for experience credit. Nobody uses experience. No bona fide business credit lines, business loans, business credit cards are using these scores because they don't calculate anything. See what I'm saying? There's no utilization. We don't know if the limit is 25,000, and that would make this 24,000, like 98% utilization, or we don't know that it's 100,000 and it's only 25% utilization. We have no actionable intel to evaluate this account. No algorithms can evaluate this account. That's why FICO's coming in here and it's just seeing wide open country. So guys, the biggest credit scam that we can talk about is the travesty that once again businesses are taking advantage of borrowers because you don't know the rules of this game. So final story. What's interesting is this gentleman, I wanted to show you this particular report because this gentleman comes to me and he is a baller. He is a businessman. He's amazing, extremely successful, and has literally a 10-figure income. 10-figure income from originally he was in real estate. When he went through this process and got to evaluate, it was like I had pulled it was like I had just pulled his fingernails out, because he could not believe that real businesses had so little. I mean, they was so not legitimate, right? This business credit reporting, legitimate PCID and business credit identity accounts. It was interesting to watch somebody who is just new to Fundability, just new to getting fundable, and to find somebody saying, how can they do this? How is it possible that there is such bad record keeping about all this business credit that's going on out there? How is it that there are so many scams? He was using my term. How is it there are so many scams? How is it that people are getting away with this? And that's why I started this podcast. That's why I do what I do with my boot camps, right? Go to getfundable.com and check out the boot camps if you want to get all make all of this actionable in a single weekend. I'm doing this because it's not right. It is not right at all. And I'm tired of it. And how do you grade this as a 34 when there's no information here? There's no bad information. There's no bad information at all. How do you grade something when there's no information? So, guys, we'll pick this up on our next episode. Got even more to give you. Got a few more things on business. Then we're gonna take some stuff on some. So I got some great stuff on your installment loans, and then I've got some podcasts that are going to be on the road. So nothing but amazing stuff, at least according to me. Nothing but amazing stuff coming at you. So I want you to keep binging, take this seriously, and if you're not already effable, man, damn it, get as effable as you possibly can be, as fast as you can be. You guys have a spectacular rest of your day, morning, noon, or night. Bye now. Hey guys, thank you for listening to Are You Effable? Please leave comments because I would love to read about your aha moments from this episode. And be sure to visit fundinghackers.com to view the blog post, get important links, join our community, and much, much more. And you gotta tell your friends about this podcast. We want them to become effable too.